Hi, good morning, good afternoon, good evening, regardless of where you are in the world. I'm so grateful and thankful that you're participating and you're coming in to actually have a very interesting conversation in which we're talking about money. So the title of this masterclass is Doing Business Despite Financial Uncertainty. And we have two amazing people that are, I would say, dear friends, business colleagues, but they're well-respected experts that's in the industry. So I want to personally thank you both for joining this, hopefully this riveting conversation. And I particularly want to thank Ray. It's 6 a.m. He's out in California. So he got up, got suited up, and he wanted to make sure that he can at least give of his knowledge, his insight, as well as his experience. So welcome to our masterclass.
Thank you for having us.
Absolutely. So I want this to be a conversation, is open. Feel free to post questions as well to the audience so that you can have some perspective to make sure that you can give some direction. I'll kick this off by saying, outside of the structure for May being Financial Literacy Month, we hear so many things about recession. And we hear a lot of people, they're afraid of money and having money conversations. Going back, why don't you, in your words, walk us through from your early childhood going into university? What were some of the things that you all talked about, either around the dinner table, or when did you actually pick up money and that this is something that you actually wanted to get into? And how did that shape your choices from a career perspective? And I'll start with Ray.
Hi, everyone. I guess the conversation around money, at least when I was growing up, never really took shape, probably until I was a teenager. I distinctly remember around 12. And the reason why I say that is because I grew up in quite a poor neighborhood in Manhattan. Both my parents immigrated to New York with my grandfather, and they started a small restaurant, but it was a very sort of long toil. My dad was working 16 hours a day kind of thing. My mother came to the US with almost no English literacy, and certainly finance or managing money or growing wealth was never in the conversation. So I remember saying to myself that I needed to do better in order to not be in the same spot with my family. Also, at the same time, I wanted to do better to help lift my parents out of their situation. So I picked finance really by combination of some luck and the fact that it was a necessity to bridge this sort of gap between what my parents was dealing with and what I wanted my children to be able to deal with. So,
and I think that's very similar to a lot of people. I'm sorry, continue, Ray.
No. Then I chose finance in university, and when I graduated, I went right to Wall Street because that seemingly was the right thing to do. And quickly realized that Wall Street is a difficult place. And we can go into all the whole resiliency aspect of why you choose finance and how to survive it. But the main motivation was to educate myself and my family going forward.
What about you, Harmeet?
My journey was very accidental. We are 4 generations of Indian immigrants in living in the United Kingdom here in England. I did my studies, but with the ambition to become a commercial pilot. Came out, went for my first interview in London for the training to be joining as a commercial pilot, to start doing my initial flight lessons. And I got offered the job. And next day I met a friend, and he said, Hami, I've got a job for you. You should try and go for the interview. It's at Solomon Brothers, and it's an investment bank. And I said, what is an investment bank? I have absolutely no idea, because, we were very humble, immigrant family living in the UK, didn't really have that level of sophistication in finance or even understanding beyond what a retail bank was. So just for the fun of it, I actually went for the interview. I got shown around Solomon Brothers here in London. I was the first funny looking guy in the sense of my cultural heritage on a predominantly American bank in London, which was very different in 1995. I walked around with a lot of curious stares, with people thinking, where does this guy come from? And I got the buzz. I walked on this trading floor, trading bonds. I came back and said, you know what, I'm going to take a break from being a pilot. I really want to do this finance thing, whatever these guys are doing. It's really fascinating. I really want to learn more. So I joined as a junior and really got the buzz. For me, it was not so much about money, but it was the fascination, because I didn't really know how much money was being made in the banks. I mean, UK is very different to Wall Street. It's not the same. Here, they don't really talk so much about the money. It's more about what they see in career progress. It's more about, for me, was how do I learn? How do I get better? How do I be in that seat those guys are sitting at? And what is the gap that I need to fill in to get there? So that was my real fascination. And that was 1995. And I've been doing this since then, pretty much.
Wow. What are some of those questions that you have to ask yourself in deciding what career path? And I'll kick this off by saying, for me, it was not planned. And today, I don't like to look in the rearview mirror and say that this was the absolute best plan, or this was the plan that I had. Similar to what you said, Harmeet, it was kind of accidental. I think my career today is because I had that intellectual curiosity. I did raise my hand. The plan that I had before was not the plan. It's not where I thought I would end up, but it was a journey along the way. And I had to understand money and how to make that transition of every equation into whatever industry I was going into. So talk about how would you all like convey that to that youth today?
Should I kick off?
Yeah, please.
Yes.
I guess the best illustration that I could share is my journey now with my daughter, who's 19. Because her journey and my journey are definitely very different. So I wanted to compare and contrast. My journey was this sort of this driving need to sort of lift us together. And in that journey, what you discover is that, finance is not easy, right? It's actually a very difficult, soul draining, intellectually challenging enterprise, but it's a lot of hours. There's a huge amount of commitment that's necessary to be the best. Finance is very Darwin, so you have to have that sort of mindset to excel in it. And I had that resiliency because I had this drive. I didn't necessarily have the best mind, nor the best training, right? So I went to Michigan State. Michigan State back in 1990 wasn't known for finance. And certainly, if you fast forward time now, and I came out of Michigan State to try and compete versus students now from Ivy League, I certainly wouldn't be able to. All right. So fast forward to where my daughter is now. Her internships and her preparation, starting actually with Tina when she was 14, 15, you know, gave her a roadmap where she could easily see milestones and achieve them. That is a very different journey than the one I've been on. So I guess my summation of this is that you should set milestones if you were to choose finance, and take those milestones. And I would say the best commonality for people that are really successful is to have a growth mindset, not a fixed mindset. That growth mindset you should adopt and fully embrace, because learning is not linear. It could just be exponential at times, and coming from someone who had to learn and didn't have the best training, you have to have that growth mindset. If you have a fixed mindset and say talent is fixed and I will only get here because talent is fixed or intelligence is fixed, I would not choose finance. You should adopt that growth mindset, and I think anyone is capable of doing anything.
So Hermeet, over to you.
Yeah, thanks, Tina. I think I feel very privileged to have known yourself and Ray. Again, I got to Ray through a very dear friend who I met during the MBA. Again, it's the power of the network. I think I really want to lay it out in 3 categories from my own experience, and how I've seen my 2 girls grow as well, who are graduating this year. Is, first of all, if you're a young person and you're getting in finance, surround yourself with really smart people who are older than you or about your same age, but have different skills. There's so much you can learn from each other. Don't mingle and be in your comfort zone. Get out of your comfort zone. Work with other people who have the wider skill set. Not only be in depth in finance, but take a wider angle. Learn from people who are doing psychology, people who are doing different subjects. There's so much more to being surrounded by very clever people, because you learn so much more. The other thing I really suggest is learn your craft. Work hard. For the first few years, and this will resonate with Ray as well, we worked very, very hard for the first few years. I was really not focused so much about how much money I'm going to earn. My thirst was just knowledge. I need to learn everything. Whatever these guys are doing, I want to know how they manage the risk. I want to know the trade flow. I want to know where the funding comes from. I want to know how do they calculate the funding costs. I want to know, literally, I'm going to learn all of this as quick as I can. I used to spend weekends reading books. Internet wasn't there in those days as much, and I still have some of those books going back 20, 25 years ago. It was all about, I want to consume all this information. And that graft really pays off later on. It's about becoming a sponge and consuming all that information, then learning how to apply that with the network that you have. And as you get into business, either you go into business, you must spend some time learning under the I wouldn't use the word supervision, but in an organization that has a very organized framework. So I was very privileged to be in some of the large institutions, because you become very methodical. You learn things that you need to put into practice. And third thing, I think the third larger category, I really want young people and then any generation of people to focus on, most of the days you're fighting in trenches because you're down there, focus on your study, your exam, your issue. Sometimes you need to take a 50,000 foot view and look at your roadmap where you want to go. Be focused on understanding your point A to point B to point C journey, and how you're going to get there, and what do you need to do to get there. Having the right network, what I call my wise counsel, and Ray and yourself, and some of our dear friends. I've been very, very privileged and blessed to have wise counsel around me. Sometimes I get stuck and I'll go and ask these people even today, how do I solve this? Can you help? And there is no shame in asking for help, because it really can sometimes unstuck you and make you move forward.
Absolutely.
Yeah.
So now that we've gotten that, I'm sorry, Ray.
I was just going to add, one last thing, and Harmeet illustrated it very well, is never be intimidated. The advantage this generation has now is that you have access to knowledge with a click of a finger.
Yeah.
And finance, don't be intimidated by finance, right? Just break it down into small bite-sized chunks and digest, and do not feel that it will overwhelm you, because finance can overwhelm you if you think if it as a giant concept. But if you break it down into small pieces of where you want to focus, it's just do that.
And actually, Ray, that's a very good segue to this question, which is pretty much the foundation. How would you all describe or explain finance? Like, what is it?
Ray, do you want to take a stab at this?
Well,
Before I jump in.
why don't you jump in, and I can drive from the side this time.
So I pride myself on calling myself a market structure, expert, or somebody who understands that very well. I think before we get into, and this is probably one of the things, because when I started my career, I had absolutely no idea what investment banks were. And I was coming from a very generous degree, having learned some economics and getting that. Finance is literally how the money moves, the economic activity in any country, in any nation globally is handled. And there are various service providers in different tiers who help service the economic activity in many ways. In the most general speaking world, you have your consumer-oriented institutions like your retail banks, who sit in front of larger institutional banks that actually move money at a much larger scale. We call them wholesale banks, or some banks that offer merchant banking and then offer investment banking and other types of activities. And then you have various risks and reward instruments that are traded on these that give you opportunity to invest, to take loans, to issue equity and other bits. And finance is really understanding market structure and movement of money. How do you create opportunities based on the risk and reward that you have? And you bring capital providers to people who need capital to bring them to a single marketplace in the right way so they can conduct business together. Ray, that's my simplest way of trying to explain this hugely complex topic.
Yeah, I would add that I've spent 30 years advising investors in how they should make decisions in allocating their clients' money, whether it's in Asia, Europe, US. So I look at it from the lens of capital allocation and how wonderful that system is, because you need this process to happen for companies to be created. That's how companies are created. That's how great companies become even greater. And that's how startups become Amazon, right? Amazon was created, Apple was created through these decisions by investors managing money, as well as investors managing their own money. So without that system, which is effectively capitalism, we wouldn't be able to talk like this today. So I find that part incredibly fascinating, whether you look at public markets or private equity. And then I look at finance in a different way, which is, I look at finance as, to be blunt, independence, right? Tina brought it up early. You need to have literacy so you have the ability to become independent. And whether you're an entrepreneur from a underprivileged background like myself, or someone who doesn't want to spend the rest of their life dependent 100% on someone else, and that is not just financial, that's also knowledge, and you should be able to have that ability so you have confidence 5, 10, 20 years down the road when you are going to pass that knowledge down to your children, et cetera, et cetera.
Absolutely. Thank you for that. We do have a hand raised. I would say having a technical mind and having a technical background and not going through the formal training, especially on the finance or the investment side or going through the accounting, FP&A stuff within the businesses. Um, I look at money as a product. So that's how I transition it. And I look to see, well, where does that money go? And how can that money, like a standard product, right? How can it benefit? Where can you send it? How can you transact it? So I have a question that's coming in. Boothway, you have your hand raised.
Hi everyone. Mr. Harmeet, I heard you mentioning, the market and risks and returns and all of that. And especially, I have a few family members and just people that I know that are interested in cryptocurrency, because especially in this, in the economy that we're living in now, everyone just wants to make a lot of investments where they'll yield high returns. So I wanted to find out, what are your thoughts on that, that concept? Because I understand it's an extremely volatile market. So yeah, I have no idea how to advise them, and they expect that I would be able to simply because I do finance, and I don't know.
It's a topic that I was talking to Tina just yesterday. There's a lot of interest in new ways of doing business, currencies. I think that the way to think about this, there are two forces at play. One is what's the future it's going to look like in terms of how money will be used. We moved from physical notes, cash, to credit cards, to electronic banking, which is the future that we do. We can move money now, even without using cash all day. I mean, I know at least in Europe, we hardly ever use cash. We spend everything using just touching cards or mobile phones. Mm-hmm. So cryptocurrencies have two purposes. They were originally, Bitcoin was designed for the purpose of being the equivalent of gold, as in a store of value, where you can put some money and store it, and then it will appreciate in value. And then you have other technologies like Ethereum that were used more to be able to trade, to be able to allocate, and they will then eventually facilitate trading or being able to exchange goods and services by putting something called smart contracts. These are very early stages of these technologies, these concepts, and hence they're very, very volatile. I mean, I heard folks on a public call once saying, should I take a loan to invest in Bitcoin? And I was just saying, no, don't do that. Because I think you have a way of accessing exposure, and obviously I'm not giving financial advice here, is the way to do that is if you have money that you want to invest, use a group of highly experienced regulated fund managers who can give you that exposure. Mm-hmm. In investing that money on your behalf based on what you're looking for. Don't put your hard-earned money into crypto yourself, because these are highly sophisticated and highly volatile markets, which you will not understand, and they do require a fairly experienced individual with 20-25 years experience in the industry to be able to manage that money. I think there is this hype that you can turn this money around quick. With the way finance in general investment is treated, you have an allocation strategy like Ray was talking about. You start with substantial amount of your wealth investment in safe assets, and a small part of that then in certain types of assets like small venture capital funds, which can give you a return. But you will look at an overall strategy of preserving your wealth rather than allocating a substantial amount of crypto, because speculation in these markets will lose you substantial amount of money. And I think these long term, there is no doubt that crypto in some way will stay. I mean, they're already considering digital currencies for Europe. They talk about a digital euro. The Fed in the US is already talking about some sort of digital dollar. Renminbi in China is, they are looking at creating their own digital version of this. But I think at this stage, the players that are in these markets are generally highly sophisticated. And even I myself, I don't have any money in crypto. I don't feel comfortable enough, smart enough to be able to put money in there. So I would highly recommend that if you do want to get exposure, use somebody who's highly experienced and regulated under your country to actually then give them some money to do that for you in a safe way. But generally, I would stay away from crypto at these stages because of just the pure volatility they have. I don't know, Ray, if you want to add anything.
We add that, you know, I personally know some of the most advanced investors in the world that are, you know, have long-term track records and has become famous at investing. And I will say that even they don't understand what crypto is. So that is my simple way of saying that it's incredibly difficult to understand this asset class. It is completely riffed with speculation and what they term as fast money. So, you know, I always believe that if you're going to invest your hard-earned money, you should have some information advantage, or at least be on the same par as information that is public and in the domain that is accessible. And I just don't believe crypto is in that realm. I personally have a little bit, just because I can't not say I don't, to have this conversation with my clients. And certainly my two daughters keep talking to me about crypto. And so I get that it is a generational thing, and they are much more comfortable discussing investing in this asset class than an old man like myself. But the point is, it doesn't mean that they actually understand what they're doing. It's actually because it's an interesting thing to talk about, and all of their friends are talking about it, and it is more of the unknown that's appealing about it, rather than just saying, you know what, I'll just buy Netflix because actually I love all the content on Netflix. That is why I should buy Netflix stock. That concept is so much easier than trying to understand crypto. So my counsel to you is to start simple and buy things that you like, that you transact in every day. It's what Peter Lynch at Fidelity used to bring up as you own what you know. So if you love Starbucks and you go every day, and 50 of your friends go to Starbucks every day, then analyze Starbucks and see if you want to own Starbucks. Same with Netflix, Etsy, or a retail store. You know, rather than devoting your energy into an asset class that even the smartest investors on the planet that I know don't get it.
Yeah, and the thing that I was
just going to add.
Continue.
If you're, I think if you're a young person today, fascinated by crypto, and you want to learn finance, and you're doing a degree in finance or anything similar, you've just started working in finance, consume what the purpose of the crypto is, learn about the background. I think this is we are at a very interesting crossroads with AI and crypto coming into finance in a massive way. This is really going to change your world. It's already changed ours, you know, whatever time we are going to spend in our professional lives. But you as a young person are going to be involved with AI, like ChatGPT, and some of the areas that are really going to change finance, and definitely going to have a massive impact on crypto. So I would say start with understanding the market structure, which is the word that I used. How are the markets connected? What the purpose of each technology is. Get that as part of your degree, your finance degree that you're doing. Understand where you want to be in that space, specialize in which area, because you have many areas you can specialize. M&A, product specific, you know, equities or debt markets. You could be in corporate finance, you could be in any part of those areas. And then look at where crypto falls in that space, to learn from that, to understand what purpose it's serving. can it actually be a substitute for gold? Because gold is the current sort of value to some extent. When you put money away in a country against a certain currency, you know, it's measured against gold. It was set up in that way. I'm not saying it's the right way, but it's something that you can start as a benchmark that's been working for the last 100 years, and then learn from that to then see what these technologies will play as a key role going forward, so that in your working space, your learning time that you'll have a lot more information. So consume as much as you can, understand the market structure, understand the role this currency, this technology is going to play, and then apply that accordingly. Because then you'll be able to cut through all the noise. There's a lot of noise on the internet, you know, on Twitter, on Instagram and other places. You want to be able to make a sense. Once you understand the market structure and the role each technology or the currency will play, you'll then be able to say, do I actually believe in what these people are saying? Because you'll have clarity at that point.
Absolutely. And I would say, just across the board, any perspectives in which we're giving, we are not advising in what direction you should take your funds or what vehicle that you should invest in. And Hermit, I think if you remember back probably 8 years ago when Bitcoin, we got the white paper. And just like anything else, you know, several of us, we actually put only a small amount of funds in which we were willing to lose just to understand the history, the background, how does it work? It raises a lot of questions, and then those questions you can take to a professional to be able to ask. So any type of investments that you're going to do, especially during this financial literacy month, and it's going to continue. If you have money, similar to what Hermit and Ray said, do not take your hard-earned money that you need to be able to try to close the gap from a debt standpoint. There are no get-rich-quick schemes that's out here. Make sure that you understand the whole process and to speak with someone about that. Yes, I believe this is Carbell.
Greetings, everyone. It's really an honor to just be in the space and you know, just hear from financial experts. So since, you know, we've been bringing up the topic about investing, one thing that, you know, one question that I always tend to ask myself, because it's something that I've actually been looking into this year, like, what would you guys advise or what would you recommend as like a first step in investing, but in general? Because I've been doing a lot of research and it's quite confusing, you know, like what would you recommend? What would you advise as like, you know, one thing, like a few things you should look into before investing? Like kind of like the baby steps you should take before you even invest in, whether it's property or businesses or in a bank. What would you recommend in terms of that?
Ray, you want to take this question?
No, I think you should drive again first.
Okay,
Brilliant. Yeah.
I think again, it depends what your wider purpose is, right? And I highly recommend, if you're not, it really depends if you're looking to become a wealth manager yourself over the long term. Is this what you aspire to be? Or you're looking to allocate some of your own hard-earned money today and deciding how you want to allocate that. So if it's the latter, then I would highly recommend that you sit down with somebody who has many, many years of experience and qualifications, and they are regulated to some extent to advise retail investors to give you that advice. If you're looking to learn on how to allocate capital, then there's tremendous amount of information out there, which you can start with understanding the difference between allocating in public markets as private markets. How does private equity work? How does venture capital work? What access do you have in accessing those opportunities directly? Do you have access to relevant? I mean, one of the things, because I run my own business now, and one of the challenges we face, and we do this every day, is directing investors' money and doing due diligence on, is this the right opportunity for them, and is this a real opportunity to invest the money in? Because we see a lot of opportunities every day. And believe me, it's the hardest thing to do. the due diligence on identifying what's good and what's realistic to get it done in the time frame people are looking at. I would do a lot of research and take a lot of good advice from people who have done this for many, many years. If you're learning towards it, then I would get more resources to learn about allocation in public markets, allocation in debt markets, and constructing a very balanced portfolio that could give you that exposure that you need. Investing in businesses is a completely separate topic on its own, and it varies by region, where you are, what kind of industries are there, what topics available. We'll share some resources at the end of this presentation, which you can read. There are a few books, there are some podcasts with some origin stories in there, the really, really useful ideas that you can take away and learn. And if you need more information, just please come back to Tina and team, and we'll be able to share more resources with you that you can learn and guide you through the process as you grow as a person and learn more about finance.
Perfect. Ray, do you have anything? If not, I'm going to take this and shift this to what everybody is talking about today. It's just debt.
Just very quickly, I'll give you the advice I give my two daughters, 19 and 17. They both have E-Trade accounts, and they keep saying, Dad, when should I buy, etc. And what should I buy? I say to them, as I said in one of my answers, start investigating by talking to your friends and other networks that you have in regards to what you see every day. There are great investing opportunities that you see every day, where you shop, where you eat, what merchandise you buy. I'll give you a good example. My daughter said a while ago, Dad, Bed Bath & Beyond sucks. We're never going there again. And of course, Bed Bath & Beyond just declared bankruptcy, right? So it could be as simple as that. As you start, buy stocks and things that you like for you, that you consume. And then, of course, you can easily just listen to earnings calls. The internet gives you complete access to earnings results. And you just read, and you should track the companies over time. That would be my advice.
No, thank you, Ray. And I'm glad that you say that because I don't know how many of you, and you can show by just raising your electronic hands, have you even considered even joining an earnings call? Do you even know what an earnings call is? And that it is accessible. Right. I would just dare say probably a lot. And that's okay. That's why it's important to make sure that you're networking. And Ray, I absolutely like what you just said. Invest in things that you have an interest in, because that's going to help you do the due diligence. If you're outside of your, if you're over your skis and trying to invest in things that you have absolutely no idea about, that's a huge learning curve. And there's just so many nuances that you have to try to unpack, communities that you're going to have to go into that's not natural. Start small, start with what you know, start with what you have an interest in. So quickly shifting to debt, especially when we start talking about recession. How would you define what is considered to be a good debt? Especially we have quite a few university students that's on this call now. What is a good debt? What is a bad debt? And how should they constantly look at I would say balancing that? And what is considered to be liquid? People always say, oh, well, I'm liquid, or such and such has X amount of net income. And I hear people using these things interchangeably. I don't think they quite understand what that really means. And I want you all to declare education. We're in class right now. Can you define what that is and what's considered to be good and bad debt?
Well, Harmeet should definitely kick off because he actually packages debt. So
brilliant. I think if you're a student, it varies by country, because in US it's the student debt is very different to European situation here. But generally, I think debt is a very useful instrument or tool to use to increase the opportunities that you can access as a business, as an individual. But you must look at it very, very carefully in terms of affordability. You need to be able to understand if you make a certain amount of income as an individual or as a business, that after paying your costs, your expenses, you have enough money left to service the debt. That's really key. I mean, we find that, this is not just a issue for students. I mean, I've seen very wealthy people that come to us, effectively like, I'm like a problem solver for very wealthy people to some extent. They come and say, I made 50 million. I've invested that into a property. I don't have any money to invest back in my business. Can I take a financing facility? And you think about it, think, well, let's talk about affordability. You start analyzing, and liquidity for everybody is a big issue, especially in today's environment. If you have cash and you can pay things with cash today without taking debt, is the preferred route, because the cost of the debt is very, very high when you take that. So I would say, look at what your net earnings as a business or as an individual are after paying your expenses, then to see if you can actually service the cost of the loan or cost of the debt. I think that's highly critical. But if you're a student, and for example, in the UK, the student debt is offered in a very different way. If you're a student and you're a resident, you're actually given money to go to your degree, but you don't pay that till you start working. So in that case, I think it's a no-brainer for students to learn, and the opportunity to a degree in finance or degree in engineering, that if that creates opportunities for people that come from underserved communities who don't have access, that they're able to take this loan and at a fairly reasonable cost, and then pay it when they are fully employed and paid over a number of years.
Yeah, and so I'm going to flip this a little bit because in the comments, someone said, I thought all debt was bad debt. From a personal standpoint, it means something different. From a business perspective, it is definitely something different. Hermeet, can you talk about why debt is considered a good cash cow?
Yeah, so I think the debt is in a business is actually a very useful instrument, very, very useful instrument, because it allows you to actually create resources in the company. You have to look at the cost of equity. It's really important. If you were to raise money, let's say you're a small company with a reasonable amount of revenues, if you wanted to build another part of the business and you were to raise equity, you'll have to dilute your shareholding to raise more equity cash. Whereas a serviceable debt, if your business can afford it, can reduce that substantially. I actually have a live case for this. I'll talk in generic terms. I was supporting a British entrepreneur, who wanted to raise into millions of pounds in UK sterling money to invest in his company. And the choice was he would actually dilute himself 30% of his company if he was to raise money through this equity. But if he raised this through debt, he only had to pay 8% interest coupon. So there's much more benefit for him to take debt in this case than actually dilute himself. But his business is profitable; it can afford that debt, and it was very low loan to value in the sense the actual cost to the business. I think it's a very useful instrument, but it needs to be carefully thought, structured, and considered. And it's used very usefully across many industries, as you know. In some cases, in real estate, for example, debt is used substantially. Sometimes you get debt to equity ratios in the good times when the interest rates were low, where you put 20% equity and 80% debt. That's during the construction phase. Then you sell the asset, and it gives you very high return because you're leveraged, and the equity return is enhanced by that. But it really depends situation by situation. A great instrument to use, but on a case-by-case basis.
Yeah, I just wanted to make sure I expanded the mind so people, when they think about, when they hear the word debt, especially if you're transitioning from university and you want to be an entrepreneur and your business is doing well, then I don't want that tape in your head to say debt is bad. It is a different type of instrument that you can use. So I'm switching real quickly, and we're running out of time. I want to talk about SVB. And for most of you around the world, if you don't know where SVB is, that's Silicon Valley Bank. And when we're talking about debt, we're talking about having access to your cash, your liquidity, to make you liquid. There's some things that have happened that has shook the financial industry, very similar to the financial crisis that we had back in 2008, 2009. Ray, walk us through what happened. What does that mean?
Sure.
How does that impact people? And the last piece to that, when you're thinking about a banking institution, what are some of the things that you need to be looking for in questions you ask?
Yep. What happened with Silicon Valley Bank and what is actually happening in real time with First Republic Bank, because I want to draw distinction between the two, is effectively a breakdown in trust, right? Silicon Valley Bank had a very concentrated deposit base, all of which was mostly entrepreneurs. And it was struck down by that concentration of depositors and, frankly, technology, right? The speed of the collapse has never been done in history, not even during the 2008 financial crisis. And the reason for that simply is technology now caused that bank run, right? People got on Twitter, Facebook, etc., and said, Silicon Valley Bank is dangerous. You should take your money out. And that is what caused Silicon Valley Bank to go. Part of it is concentration risk, and then the other part was the loss of trust. That is now transitioned to other banks where depositors feel that the trust in the bank is lost, and depositors continue to take money out of certain banks, whether or not they have the $250,000 insured level or not. And it's actually interesting issue for the US currently, because banks never had to, or the Fed have ever had to deal with technology as a weapon or as a transmission of bad information, right? So technology is now transmitting information in real time. And in fact, you can actually see the inflows and outflows of every bank in America now in real time. It's called an H8, which is published. No one ever knew what an H8 was before this. Now everyone's looking at the H8 and saying, wow, this bank is seeing deposit flow coming out. It must be dangerous. So they're drawing these conclusions. So what should you do? There'll be other bank failures. It's not going to be 2008, 2009, because there's no real leverage in the system. This is just a breakdown of trust and terrible regulatory oversight by the Fed. So feel comfortable that your money is safe in a JP Morgan, Bank of America, Charles Schwab, E-Trade type of institution. Where this is kind of messing around is in some of these smaller regional banks. But again, if you're under the $250,000 threshold, there should be nothing to think about at all. It's really if you have above 250,000 where it's in the uninsured bucket, where you should be moving money around.
Yeah, and just for those that's in the United States, or even if you're outside the US and you are banking with one of these financial institutions here, the FDIC, they have made that guarantee of being able to give you your money back if it's below 250,000, that 250,000 threshold. And that was raised as a result of the crisis. So Ray, you're absolutely correct with that. I see that I have a hand raised. We're running out of time. If you all can stick around for like 10 more minutes, there's a couple things that I want to get to. Okay. Bufle, I think you have a question. You can come out from hiding and I will let you again.
Mr. Ray, speaking about that great deal of trust that you need to have, I'm not sure if you've heard about the scandal that happened just like recently, where the CEO essentially used to manipulate the books and everything, and all that jazz, and it caused the share price of the company to go high. Like, it was a really lucrative,
Sure.
like, yes. And then obviously, as things happen, this came out and then the share price plummeted and everything. So now I'm thinking, so I've done my research. I've looked at the financial statements. Of course, these are financial statements that are being put out by the company. So that's the only thing I can rely on at this point. So I've done all of that, but still, it's still risky because the information that they might be putting out is not like, how does one navigate around that?
Sure.
Like, how do I discern which financial statements are accurate and which ones are like, this is probably a little shady.
Yeah.
Okay, right?
Well, the first thing I'll say is you can never protect yourself against fraud. All right. If a company's out to commit fraud, I'll just give you FTX as an example, right? I don't know if everyone is aware of the FTX fraud, but this gentleman who was 30 years old was the CEO of FTX, which is one of the biggest crypto exchanges on the planet, convinced the smartest people in the room to give him hundreds of millions of dollars and invest with FTX. And it became fraud. And these are some of the smartest people in the private equity space that invested alongside Sam. So, Elizabeth Holmes with Theranos is another great example of a woman who went to Stanford, right, had great pedigree, committed fraud. And if you look at her board of directors, they were some of the smartest people in America who bought into her vision. So it's impossible, no matter how prepared you are and how much work you do, if a company is going to commit fraud, that's it. Which is why, again, when you start investing, you should start with things that you know. Right?
So we're going to quickly go to our rapid fire, just for people to know a little bit more about you. And then we have a list of resources that we're going to share. So I'll start with Hermeet. Who do you admire and why?
Oh, this is a hard question. My mom. My mother is a very hardworking and resilient person. Somebody I confide in, and I deeply admire her. Somebody I don't think could deliver what she has in her life as a single parent. So I am absolutely at awe at what my mom can achieve.
Perfect. Ray?
It's ironic. I would say my mother as well. She came to this country when she was 18, barely had any English, with, I believe she told me, about $108 in her pocket. Got her degree on her own, got a free scholarship on her own, and was able to raise two boys. Both are now reasonably educated and reasonably successful, all on her taking this trip on a boat to New York and striving and having resiliency and never really asking for anything in return, etc.
So what would you say is your greatest accomplishments today?
Ray? This is a hard question. I think you should start with.
Well, I think well, the story is untold yet in its entirety, but for me, is my two daughters. I think, my wife and I, Annabelle, have raised up to this point, Caitlin and Charlotte, two, I think, amazing ambassadors of both womanhood, the love for this planet, the ability to as you said earlier, network in a professional way, which is a skill set I should have learned when I was 15. I would be much different now. I had to start that when I was, 30. So start early. That's the main point of your networking. And, has just, true like intellectual curiosity about life and what it means and living in the present. So I admire both of them greatly.
So you actually answered a portion of the next question that I have. So I'll just turn to you, Harmeet. What is one of the most insightful pieces of advice that you've ever received?
Consume, learn. I think very early in my career, I met somebody who was quite senior to me, and I made him my mentor at Merrill Lynch. It was always, that finance is a deeply fascinating field. Don't stop learning. Don't focus on money, focus on achievement. So keep learning.
Ray, did you want to add anything?
Yeah, I'll add one simple thing, which I wish I, again, knew when I was 12, 15, 17, 19, is that if you commit just 20 hours, 45 minutes a day to develop a very specific skill, that commitment alone, that consistency will make you already better than more than 50% of the people you're competing against. And sometimes 90%, depending on how long you commit to. So if you commit to learning finance or learning the guitar or a language and just do it consistently, get into that growth mindset that you can actually learn anything and be really good at it. You can outwork and outcompete 90% of your competition.
Absolutely, and that's with everything. I'm sorry, I laughed when you said the guitar because that's.
I purposely
that's
brought that up for you. I know.
And this is a question, and I know we way over time, but I have to ask this question. And I know that you all are probably not prepared for this question. But I heard it and I said, oh, that would be quite interesting. So if there was a memoir or a book that was written about you, what would be an appropriate title? I'm still thinking about it.
No, I guess, I'll just kick off. I guess my memoir is a combination of a couple of, let's say, movies. So one is partly Shawshank Redemption, where I'm Andrew Dufresne crawling through the pipe and getting through to the other side, which, is a testimony to, again, resiliency, toil, passion, to get somewhere else.
Very nice. Harmeet?
Yeah, mine will be just blessed. I mean, I come from a very simple family background from a small town called Amritsar in north of India. I don't think any of us visualized of actually doing finance or even having, access to resources that we do today. So I feel myself that I'm truly blessed to be able to experience what I experience every day, to learn finance, to meet the kind of people I do, and to learn from them.
Thank you for Ray for getting up at the crack of dawn. Safe travels back to the East Coast. Harmeet, I look forward to seeing you very soon in London. But thank you for just your truth telling, your just being transparent about your journey, but being willing to pass on the information that you've learned to others so that they can start thinking about things from a unique perspective. Thank you both.